Hello, everyone. Welcome to episode 32 of Charts and Checks, alongside your usual hosts, Donald Foyani of the Gorilla with Glasses and Alvaro Pereira of the Bilingual Stock Market Channel. We again are joined by Don Lett from Stock Chartistry. Boys, how we doing today?
What's
Good.
up, folks? Yeah, so we couldn't do the podcast last week, so we do apologize for that. But you had a rough week, Danny.
Yeah.
Same here.
No, I was busy.
Yeah, you were very busy. I was very busy as well. So today, in order to make up for the podcast that we couldn't do last week, guess who is joining us today? The Stock Strategy. What's up, bro? How are you?
Good to go. Good to go. Glad to be back at Command Central here in the Dominican Republic.
So you came to the States for what, like for a week and a half or so?
Almost 2 weeks, working off a laptop and portable monitors. It was a pretty good setup, but not like I have here.
No kidding. Yeah, sorry about that, Don. You actually got lucky. The when I said I couldn't make it, the next day I woke up sick as a dog. So you probably dodged a bullet there, my friend.
Yeah, I thought you guys were going to get together, but next time, I guess.
I felt like absolute crap. I was like, I'm going to get this man sick. And then sure enough, woke up the next day and I could barely breathe. Still getting over it now. So here we go. Yes.
Awesome.
I think it's fair that we start with a small update. When we all got together last, we all went long Apple. I can say I'm out. Is anyone still in?
Me too. I closed the position as well.
You closed?
I got it. I got in like we talked about. I got out right away when it peaked, and then I got back in again for another dip and took another profit. It was a pretty good trade. I enjoyed it.
Heck yeah, man.
I think that as of now, that's the, all of the Magnificent Seven are down year to date, if I am not mistaken. And Apple is like the best performing stock inside the Max 7, I think. I mean, it's been ugly for the Max 7 during the year, but clearly the markets are not liking any of these stocks. So any thoughts on Apple, Don? Would you be interested in starting a position here?
Not interested in starting any positions other than what I have already in regards to silver. That's it.
Silver? Okay. Gotcha.
Yeah.
So, yeah, every single one of these stocks look ugly. And, yeah, the markets are having issues in order to go higher without the participation, the direct participation of these stocks. And I don't know, I told you, Danny, I think that we spoke about this last week. I am starting to be very concerned about the CapEx that was announced 3 weeks ago. And I don't see at least Google, Amazon, Microsoft, or Meta coming back anytime soon. So I think that for the most part, these stocks are likely to be dead money, I don't know, for the upcoming 3 quarters maybe. So,
that's easy to say given what we've seen the past couple of weeks. I just feel like it's all price and narrative. If any of that changes, and I don't know what changes it, who knows? Like in a week, we could wake up and decide based on some sort of report, oh, they're actually monetizing this stuff. When Nvidia had a decent, and they're monetizing it already, but Nvidia had a good day a couple of days ago when someone released a fact that the full stack of AMD's AI stack is actually far more cost effective than anything coming out of AMD or Intel. And that lasted all of a day, but it could have lasted a longer time. I would just say for people that are looking at these stocks falling, and you're right, it is because of the CapEx, that weakness associated with the CapEx cycle is nothing new. It's just for the past 10 years, these mega cap companies have been able to avoid those CapEx cycles because there was nothing of scale to invest in, and were able to instead give us buybacks, free cash flow, and
they became cash cows.
Dividends.
So yeah, that's what happened. But in the case of Apple, it is still a cash cow, and the stock isn't doing anything. So yeah, we have an issue here. If you had to buy one of these stocks, then which one would you pick if you were forced to start the position here on any of the Magnificent Seven? Which one would you pick?
Are you talking to me, or are you talking?
Yeah, Don. When I say Donnie,
I'm Donnie. I'm Donnie.
Correct. You're Don. Correct.
Okay, yeah. I would take Google. I told you already they're going to rule the world. So I would definitely take Google.
Do you have any levels for us on Google?
Sure. Can take
He
a
just
look
had
at
a
it.
he just had a 10% correction, by the way. So maybe you believe that this could be a potential buy the deep opportunity?
Yeah. Let me take a look at that
Go ahead, please go
for you
ahead
right
and
here.
share your screen with us.
Entire screen. Here we go. Okay. You guys are
There you go.
seeing my screen?
Yes, we
Yep.
can.
All right. And I got it set right now to the SPY, because I always like to start with that. Speaking of the SPY, look at us. We're still in this range, and that's what we're dealing with. So let's go to Google. And Google kind of looks like the SPY when you look at it, right? I mean, what are we looking at? We're looking at basically a range right here. It just seems like it's stuck in, right? We had a little spot here where it came out above it. Something I've mentioned before, when you see those kind of things, a lot of times, whatever reason, the market seems like it has this idea of equilibrium. So you see a little bounce out of a range or bounce out from a moving average. It doesn't surprise me to then see an equal bounce out on the low. And then that usually will mark a low to going back into the range. So I would love to see it actually move out of this range, especially if it even got down over here on this pivot right here that we have, which is right here. It's 270.5. I mean, that to me feels like that would be a very nice buy area, but we want to see how that all sets up, of course.
It's
Once
holding
again,
$300, right? A support, which is a fat number. So do you
yeah,
think
it's
a
sitting
bounce
right on
of,
support,
yeah,
296
300?
right here, right
Correct.
there,
And it
and
just
then,
completed a 10% correction. Maybe you could
yeah,
have some people buying the dip here.
well, and you see this blue line right here. Okay, that's representing a daily moving average. I mean, a daily downtrend, and it's broke it, but it hasn't broke it with very much strength or impulse. And so that's the reason why. Because I was actually in this stock a while ago, and I made a little bit of money on it before it started going down, and then I got out. I'm not in it now because obviously this is not a good chart to get into, but this is your line right here. If it holds this line, continues to make some upside moves like that, I think we're going to be pretty good. So that's 296. If it breaks 296, then you'll either come down to the midpoint of this range or down to the bottom right here.
And when it comes to the capex that they announced, aren't you worried about that? So you've started a position here. Don't you think that they can keep punishing Google based on the way higher than expected capex that was announced? Because I mean, you sound like very optimistic on Google on artificial intelligence, right, Don?
I'm extreme. I use artificial intelligence every day. I use it probably as much as 6 hours a day, and I use a combination of ChatGPT Pro and Google Pro. And right now, if I had to do a composite score, I would say Google Pro is kicking ChatGPT's butt. And I've even considered. I'm a Microsoft guy. I've even considered moving my platform interface from Microsoft Office and Exchange Server over to Google because of what they're doing with artificial intelligence and agents. They're ahead of the curve, and what they got all the other stuff going on too. When you're a smaller business, you know what you're doing. You're buying Google ads. Google is going to rule the world. It will be the biggest company probably in the next 2 years. 2 years ago, I told you it was going to be Nvidia because of what I saw in technology. And, I'm a technology guy. So that part I do really have a good feel for. Google is the strongest of the Mag 7.
Thoughts on that, Danny?
I agree in general. I don't know if it's the strongest in the Mag 7, only because I think Nvidia has been consolidating for 7 months, and I think we saw the headline that $100 billion in capex wasn't accounted for. Rather, was if you look at all the capex, the market was surprised by $100 billion, and based on the headlines we see coming out of Meta, headlines we see coming out of other places in the market, it looks like that money is going to Nvidia. Now, that doesn't mean that Google can't become a $4 trillion company. And if I had to, pick between Google and Nvidia to buy today, with the idea of holding it for 1 or 2 years, then it's hard for me not to pick Google because they've gone from a market believing that they couldn't do anything right to a market believing that they can't do anything wrong. So It's hard. It's hard, but I feel as though we talk a lot about the capex being the downfall of these mega cap companies, but the person who's getting these capex checks is Nvidia, and the stock hasn't done anything. It's still trading in the mid 20s multiple range, and I mean, I think this is going to break out to the upside. But I'll be honest, I don't know if the earnings report is what does it because we all know what the report's going to be,
And by the
right?
way, Nvidia is reporting next week on Wednesday, by the way, February 25th. So, do you guys think that this is the make or break moment for Nvidia? Or do you think that Nvidia will be having the average negative reaction that we've seen so far during the current earnings season? It's a 7% expected move. It's like $13 approximately. And Nvidia reports next week on Wednesday, the 25th at 4:20 p.m. Thoughts on that, guys?
There's a lot going on. I don't think it's make or break. It's just there's nothing in this quarter that's going to surprise anyone. I don't think to the upside or the downside. I suppose maybe if they did more business in China, that's a potential upside catalyst that still isn't in their numbers. They just don't put them in there out of respect and courtesy for the current political situation. But I think everyone expects Nvidia to say good things about Rubin, say good things about sales, say good. It's is it going to be enough to break us out of this current malaise? I don't really think so, but is it going to cause some all-out capitulation? I don't think that's the case either. There's no capex cycle for Nvidia.
So,
They're the ones sending the chips.
do you think that the most likely scenario would be a nothing burger? It goes up a bit, goes down a bit, and remains trading within range because it's been trading sideways for I don't know since like late
Since
October.
July, since July. So
Go
it's
figure.
it's been almost a year. We're about 7-8
Yeah,
months in.
we'll know that this base is going to break to either the
Eventually,
upside or the
yeah,
downside.
you're range bound until you're not. I just feel that well, I don't know if I feel. I've observed that the issue plaguing markets right now has nothing to do with earnings. It has to do with sentiment. So I
100%.
don't think that earnings is going to be the way out of this.
Correct. Thoughts on Nvidia, Dan?
Yeah, I was a big time Nvidia fan, and I bought and sold it for 2 years and made good money off of it. And I've
You
been
were
out
selling
of it now.
puts in a very successful way.
Yeah,
Yeah.
selling puts, and
Mhm.
I won about 85 or 90% of my trades, and only had like 2 trades that didn't win out of that entire 2 years. That was during this uptrends right here, and then an uptrend earlier. But right now, like Donnie said, it's trading sideways. You said that as well. But also, if you look here too, it's this is what disturbs me about it. This is a weekly trend line right there. Okay. And you see what's happened with price is that it's actually just consistently staying below. It's just retesting is all it's doing. I honestly think this, and I said this before, this will see 160, 165 before it sees 212. I'm still standing by that. I expect that if it actually has a surge, say on earnings, that surge is sellable down into this area right through here. Then maybe we
So
might
it
be able
should
to pick
remain
up
within
something.
range. It could potentially remain within range. So to Danny's point, the upcoming earnings report might not resolve this sideways action that we've seen on Nvidia during so many months. I mean, I happen to agree with Danny, 100%. Yeah.
I just want to remind you about where Nvidia has gone. Okay. So even though
Yeah. I
we're
mean,
saying that this thing it's going to have everybody spending money and stuff like that, that was getting priced in here. So now they need to continue to price in even more acceleration, but you can only have so much acceleration. Eventually, even though you're actually doing great, but your margins are starting to compress a little bit, Google's starting to make their own chips. AMD's closing the cycle a little bit more and more on them. I think Meta's actually, I'm not sure if they involved something with Google or not, but I think that's why you're seeing this. It's like the momentum has actually slowed down on this stock. And so like we had this huge run up through here. We had a little bit of sideways, a little sideways there, and then finally it gave something back here. I'm looking for that. It would be wonderful to actually get back down to 165. Or maybe even slightly lower than that, and then let's look to actually find the next cycle. But I'm not sure it's going to go higher for the next cycle. I think we might finally actually get some pullback on this stock eventually. But it's interesting. I stopped day trading this stock as well because it will whipsaw
Yeah,
you
you're
to
saying
death.
you could also be saying that because you're no longer selling puts. So
Yeah,
you
I'm
would
not
like it to
selling
go
puts
down.
I'm not selling puts on this stock. No. But the other thing is too is that the people that really believe in this stock, once it goes down to some certain low and you think it's getting ready to break, you're trying to trade breakouts on this stock, it sucker gets bought all the way back up to the high of the day. And then when it hits the high of the day, it gets all the way sold back down to the low of the day.
Yeah,
It will chew you up and spit you
the
out. This
overhead
thing
supply is massive.
whipsaws all around. And so your bulls really believe in it, and the bears really believe as well. Somebody's going to win. Maybe Donnie's right. Maybe it goes higher. That means the Bulls won the battle. But for me right now, because of one thing, because it's underneath of this weekly trend line that I drew here, and as long as it stays below that, I'm negative.
Danny, what do you think makes Nvidia? What is the catalyst that makes it go above all-time highs?
The only thing I can think of off the bat is I know Don mentioned it a little bit earlier, but Meta actually didn't go forward with Google. They recommitted to Nvidia. That was the news out of last week. That doesn't mean that they won't go to Google eventually. I think people were waiting for that shoe to drop, and it hadn't dropped. In fact, the opposite happened. I would say that what brings Nvidia to another new all-time high would be if Meta announces they're getting into the data center business. And I think that it's possible because the way they're spending on NVIDIA chips, I can't imagine they're loading up to do anything else. And if Meta becomes a sort of hyperscaler, makes their own cloud, and NVIDIA is going to be their primary ARM supplier, I don't think anyone's priced in what that means for the stock. And I would imagine that definitely changes how people look at the relationship between NVIDIA and Meta over the next 5 and 10 years, as opposed to just what we're looking at right now, which is generally 1 to 3 year projections.
Good. Yep. Yeah, speaking of Meta, guys, so and circling back to the capex concerns, the ongoing capex concerns that the markets have as of now. Let me share my screen with you. So we've spoken about this before. Let me show you guys. Let me share my screen, and please let me know if you can see this. Hold. So here's the deal, guys. Because I have skin in the game. So take a look at these guys. These are cover calls that I have been selling on Meta. Sell calls, buy them back, sell calls, buy them back over and over and over and over and over again because I am a Meta shareholder. A Meta shareholder. My average price is at around $620 or something like that. And I mean, guys, I already made a decision here to exit the position. The most recent and capex announcement that we got from Meta. By the way, let me see if I can show you guys the position. So this is the position. Look, I guess that you guys can see this. If this pops up, take a look. So
Yeah, I can see it. You're good.
101 shares at an average cost of $618. And of course, I've been selling calls and buying them back and stuff. But yeah, I mean, I think that and taking into account the very ugly looking chart that Meta has as of now, I think that potentially the risk over here could be to the downside in most of these stocks. I am talking about Amazon, talking about Meta, Microsoft. Maybe in the case of Microsoft is 30% of the highs. So maybe over there we could make a case that the markets have already priced in a lot of bad news. But I don't know. I mean, I don't feel like very interested as of now. I could be mistaken. This wouldn't be the first time that I am mistaken.
Well, I wanted to show you this because I came across it today, and that it looks like, according to this company that does this 5-wave pattern, it looks like they believe that Meta is putting in the downside of the fourth leg of a 5-wave pattern. And you can see this time and price box is actually printing over here at 750 in the 750 area. So I do like these things. I pay attention to them. They're long term. So you see this time and price box is actually pricing that out for sometime. This isn't really that far away though. Pricing it out for sometime around May, that you should see it rise up through that. So I am going to watch this actually to see if it begins to actually pick up some. I like to see it flatten out on the moving averages and then carry the 5 and come back and test the 5 and the 10, and then I like to get in. I will look to see if it's putting in a bottom.
You
because
are on
of
the other
this.
side of my. You are on the other side of my trade, so I shouldn't be closing Meta.
There you go. Well, maybe you
Yeah,
should.
man, and I'm concerned about
I
more
just
downside. So
I thought it had a 5-wave down, but I was surprised to see that it actually is actually being designated as a 5-wave up, and it looks like a pretty clean 5-wave actually.
okay, it's good to know. You didn't show me this chart before, but
These
I'll
don't
keep it in mind.
necessarily play out like that, guys. Okay,
I
you know,
mean,
I mean, this just like
no
everything else.
technical indicator plays out 100% of the
Exactly.
time, but it's interesting to see this information.
Yeah.
Of course. Yep.
Well, you're not the only one that's optimistic. If I saw it right, Pershing Square Ackman's fund made Meta a massive new
Started a
position from
position.
their 13
Mhm.
Fs.
Yep.
And I really like the way that it's forming up. In the ops fund that I run with a friend of mine at a different company, we sold out of Amazon and used part of those proceeds to go into things like CrowdStrike and Meta. So we're kind of in the same boat.
But the technical chart looks ugly, guys. So it's below all the moving averages, I
It
think.
could look worse.
Yeah, it could look worse. Correct. So from
Yeah,
a
it doesn't
technical
look
standpoint,
great.
it could
It
be
doesn't look
exiting the
great.
position. So
Yeah.
the technical chart doesn't help.
No.
Yeah, correct. Thoughts on
Yeah.
Meta, done?
Well, it also has that. Well, it's below all the moving
I mean,
averages
aside
right
from
there. You
the-
see prices below all the moving averages, and the slope is negative in the faster moving averages. But you do have the 20 coming up as a positive support or positive moving or positive slope, and then 200 obviously is a positive, but it's below those moving averages as we speak. I also think that the reason why you see this like magenta line like this is actually, I was looking at this and I was thinking that we had kind of like an ABC pattern here. Right. And so I wanted to know what is the 61.8 and what's the 100% of that ABC pattern.
That is
And so
600,
that's
right?
what you're
Down there?
seeing right there. And so it really came very close to hitting it right here. This 621.03. So it may be good now. And that actually portends well for Meta as far as like if that's the end of the move, then it portends well that it actually didn't have a 100% a C leg to it. So once again, you got.
But you wouldn't go long this thing here, Don, right?
No,
Of course,
it's gotta
because the
get above
technical
it.
chart is broken. Correct. So
I
that's what we
don't-
are talking about. Correct.
I tend to not go in until I see at least. Well, this is a weekly chart. No, this is a daily chart. Okay. Yeah, I tend to not get in until I see it get above the 5-period moving average. So
5
let's
DMA.
add all the moving averages on there just to take a look at them all.
That's below all of them. Yeah. all of
Yeah,
them.
it's below it. It looks like it's trying to capture it as of today. So I would want to see, as I said before, I've looked at this pattern quite a bit. I would love to see it actually get up. It gets into these moving averages, and also, because you have resistance right here, right? So it gets into those moving averages and resistance, then it comes back down, and this 5 starts curling around like that, tests it there, maybe spikes through even, and then goes up. That's what I would like to see. So that would be an entry point for me. That's the way I like to enter. I like to enter on what they call the right side of the V. You create a V on the right side, and then I know where my stop losses are at. And it's shown already that it's got a spot that it's, that it's got a buyer there. So.
Good.
I like that.
Hey, yeah. Yeah, go ahead, Danny. Did you want to say something?
No, I like what he said there. You want to be on the right side of the V. It's a little too early to be getting in right now. I would just look like that level 680 where it popped up. If it could get above 680, that's where I would go long if I wanted to trade it. But I'm already in. I'm pretty optimistic.
I guess that I turned bearish, and although I know that it's impossible to time the markets, I think that maybe I can sell out of. I can close the position here and maybe re-enter at 580, 600. I am making good money out of it. I've been making very good money by selling calls, by selling covered calls. So I don't like the technical short. And this ongoing situation, this super higher than expected capex announcements that we've gotten so far, I don't know, makes me a bit. I would say that a bit. I don't know, pessimistic about the short-term potential of these stocks, and well, I might be closing this position sooner rather than later. So that's a main message that I want to get across here.
I don't I don't only
Yeah.
trade I don't only trade moving averages, but this also reminds me of some of my day trading setups where I also talk about a second leg breakout. This is the yellow line is once again a weekly trend line right here. So it had a nice impulsive breakout of that weekly trend line. And then typical patterns, a lot of times they'll go back and they'll either retest where it broke out at, or close to where it broke out at, or the low of the candle before the breakout. So even coming back into this range right here, and it comes back as a back test, that's actually positive. If you look at this, it's beginning to
It's a
create
clear
bullish
trend line. Yep.
momentum on the weekly chart. And there I might go ahead and get in, because now I have
630,
something.
right?
Yeah, now I have something right here that I'm holding on to as like, that's my low point. You see that? So once again, this is really just a back test of a breakout in my mind.
Okay. Gotcha. Hey guys, let's talk about Walmart. What's reported today, and the bar was extremely high. We talked about this before, Danny. What do you think? Is this a buy the dip opportunity? Would you be buying the dip here?
If you want to trade it, for sure. I think that if I remember right, it opened up in the morning. It was down four bucks, and then was able to reverse. Hold on, I actually don't know what it's doing at this exact moment, but the general headlines. Oh, it's actually going back down a little bit.
Guidance was a bit soft, but I
That
mean
that
they
was that was the headline. Yeah.
correct.
Yeah, but their guidance, or not their guidance, their management tends to sandbag a little bit. They love to underpromise so they can overdeliver. There's certainly some of that going on here. I was taking a look at this from a valuation perspective. It trades around 48 times
Unbelievable.
forward. Costco topped at 60. So if you wanted to go ahead and take, listen, if you think it can get to 60 before it tops out, great. I sold out of this 2 or 3 days before the quarter, made I think 16, 17% when everything was said and done, and I was happy with it. I just think that if you want to buy this now, you have to understand that your upside is probably limited to valuation expansion, because there's not a lot they can do to surprise otherwise. You need even more of a rotation. So if you get in, understand it. You need to be a little bit patient, and you should also have tempered expectations with respect to what your end all gain will be.
And if we say that the markets are super paranoid about the potential disruption of artificial intelligence over so many industries, so maybe we have some more room to the upside when it comes to the multiples, because this is like some sort of a um safe haven. I don't know, because I mean artificial intelligence will not be disrupting Walmart, so people will still be shopping at Walmart regardless of whatever happens with artificial intelligence. So thoughts on
If if
that, Danny?
if anything, it could help Walmart increase their margins. I think like
Correct.
their
I mean,
net margin
aside from that,
overall
correct.
is 3%. If AI can help their logistics or anything and get it to 5 or 6%, then your multiple can be higher than it was historically. But I don't know if it can be at 40. I guess the point I would make is the
No,
multiple
no,
is probably, yeah. Go ahead.
I am playing devil's advocate. I mean,
Yeah, no.
these multiples
I
are insane.
I guess I'll put it
We've
this way:
talked about
if
this
you're
before.
buying Walmart at a 48 times forward, you're probably trading it. It's hard to
Correct.
make an
Correct.
investment case starting your position here based on the earnings they just put forward and the valuation the market is giving it.
Agreed. Yep.
Doesn't mean it
Uh,
won't work. Just means you gotta, have the right expectations. You're not buying this at 20 times earnings when it was trading at 70 or 80. You're buying this at 40 at $1 trillion market cap valuation. Like, how big do you think Walmart could actually get?
or how much growth on the markets are discounting. And of course, here we get once again the paranoia about artificial intelligence disrupting everything. And Walmart is not a potential candidate for disruption because of artificial intelligence. Dan, what do you think about Walmart? Would you be a buyer here?
Well, I think Donnie hit the nail on the head for me. I don't think it has a lot of upside potential right now. I think it has more downside potential. But I'm looking at this chart, and he was talking about like trading it. I look at this chart, and if this chart stays in this range here is what I call a compression zone. I just wrote this indicator
What
last
levels
week.
are you seeing there within the range?
127
Mm-hmm.
at the top of the range, and
Okay.
125.75 at the bottom of the range.
It's a Dubak range. Okay.
Yeah, but I just wrote this indicator right down here called compression zone indicator, and you can see right here that it's indicate. It says price is compressing big time right through here, and when it has a very long compression string like that, eventually it's going to release that energy, and you can see right here it released the energy down, and then it had a retest of it. That's that white candle right there, and then you saw it coming down like that. So this is actually setting up to be a great high reward, low risk kind of trade. I would love to see this bounce out of the zone since it's below all the moving averages here on the 15-minute chart. If I was day trading this, I would want to try to see that same kind of thing, that, and then down. And that's more for like a day trade. And that's, when you're looking at a 15-minute chart, that's kind of what you're looking at. But let's take a look at it on a 4-hour chart, and then I can give you a better idea about in regards to is there a level or is there something I would look for to go long on it, say for a longer period of time. So yeah, so the 4 hours also showing us something pretty good too. Look here, these we got two pivot zones right here, and it's slightly below both of those pivot zones. It needs to get on the opposite side of that, and then retest from the top side. That's the right side of the V, and then then you could actually go long on this for a swing trade. Right now, the only
So
swing trade.
above 128 done, right? 128, 129.
No, not for me. For me, it's the number right there is
Yeah, please point out the
126.4.
levels. Yeah.
So if it shows it holds 126.4 and then begins moving up, I would actually go ahead and get in because I got a very low risk on something like that. I don't need to get all the way up to here. I try to get in. I do try to get in on these lows, but I also try to find where it's showing me that it's support. But and when I'm looking at this chart right now, it's saying it wants to go lower. It probably wants to go back and retest around here about
back as of now,
121.
It's pulling back.
Yeah,
it's trading at $125.50. I mean, the trading session is still running. It's 3:25 p.m.
Well, you got this candle right here. It's breaking through both of those pivot points, right?
Yeah, so maybe we have a little bit of herb coming out of the tire, let's just put it that way, on the consumer staple stocks that have gone ballistic recently because of the artificial intelligence disruption fears. So yeah, maybe we could get lower prices on Walmart. What price would you be interested in, Danny, if you wanted to reposition yourself on Walmart?
Myself, yeah. Hold on, let me pull up that chart.
Okay.
It'd be tough for me. I feel like I'd just wait for this to really breathe. I'd wait for the 50-day, which is around 118 or 119. I would expect that it finds support first at 123 and change, and then again at 120, 175. But if I wanted to get back in, I would wait for this to retest the 50-day. It For the first time in a long time at 135. That may have been the biggest separation Walmart has had from its 50-day simple moving average on a percentage basis in the last 12 months. And typically when you get too far away from a moving average and you come back this quickly like it's doing right now, you're destined to retest. And I think broadly speaking, when I think about what this means, and we talked about it in the morning, when it reversed the pre-market losses, had it ended the day positive, you can make a very strong case that that was an indication that the market was willing to put more stock, more money into these consumer staples baskets. Walmart is the bellwether of this sector, along with maybe Coca-Cola and Pepsi. If investors aren't willing to put more money into the Walmarts, the Cokes, and the Pepsis of the world, it means that the market is probably trying to find the next place to rotate into. And as a result, I would be a lot more cautious on the overall group for trades, given what we're seeing in Walmart right now.
Good. Any other levels then before we move on?
Well, I just wanted to show was what Donnie was talking about. All those circles represent where it pushed under the 50-day and then pushed back over. Usually if I'm using a moving average, I like to actually see it. I love to see it spike under and then push over and then hold. And that usually means that you're off to the races, like here, you could see, right? Off like here. Okay. So every time it did that, or here it spiked through for the 1 day and then went over. Here it had a spike through and went over. Here it just did a touch, but it was also extended, like Donnie was talking about, and now we're even more extended. So it is probably time to actually revisit that 50-day moving average. It looks like it's has a lot of respect for the 50-day on this chart.
It's 118, 120, right?
Yeah, that's the 50-day right now.
Correct. That's a 50-day.
Right here.
Awesome.
Here's your
Awesome.
numbers.
Good. Hey guys, oil stocks are going nuts. Did you guys see Occidental Petroleum today? Going ballistic. And oil is up as we are speaking here. Oil is up on the day 2%. So what's the best vehicle? You have exposure to oil. USO, Occidental Petroleum, Exxon Mobil. What do you guys think? Donnie.
Off the top of my head, I'm long Fang, FANG. They're in the Permian Basin. I like them quite a bit. Other people would probably point to Devon. They're combining with Coterra. They can do nat gas and oil. I just think the Diamondback, which is Fang, tends to be the best operator from a margin perspective across different scenarios for oil. But I don't think you need to get too cute. I just chose Fang because it hadn't broken out yet, and I chose this 2 weeks ago. So I'm up nicely in the position. And I this morning woke up, saw the news. It looks like there's going to be a little bit more action in Iran. And if there is, this will keep going higher. I think the president said vaguely they're looking at it over the next 10 days. So that puts you into next weekend as well. And I decided to sell some calls on this position up to the 195 and $200 strikes on about 50% of the position just to hedge a little bit. But I think this is a good way to play this breakout. Don was kind enough to put the chart up, so I didn't have to. You can see it's clearly accelerating, and I don't know. I would probably get rid of this at 200. I don't think it'd be great to see it get to 200, but that would be quite a lot. The only issue is that if we get some if you get a de-escalation in Iran, I think a lot of the bid comes out of oil, and that will end this trade pretty quickly.
That's a very good looking chart. Take a look. That's a clear breakout to the upside. Don, thoughts on Fang?
First of all, Donnie, I think that's an excellent trade.
Thank you.
Yeah, for real.
So I just want to commend you on
just
that.
How we wrote it up.
You got your momentum. It has a nice momentum coming up through here. This is a weekly chart, so it's got some strength to it. And then the momentum picked up. Really looked like on that dip on the beginning of the year. You got a dip, and then from that point on, it's been off to the races, and the momentum's actually increased. And so I think, that's definitely. I think it's a great trade. For me, I guess if you wanted to get in on this, once again, I love the 5-period moving average, so I would look for it to come back and retest the 5. These dots down here, I showed these things. Well, let me do this. Here, I don't like that line showing up. Okay, good. I show these dots down here to the people in our group a lot, and these dots actually represent RSI. The magenta ones are when it's over 70, and the green ones are when it's over 65. And it just gives me a visual about the strength of the stock. The line is a different custom technical indicator I'm not going to get into. But you can see that basically the RSI has been what they call oversold. I would prefer people call it extended, because anytime you see that RSI, if it's over top of the 5 SMA, you usually can ride the 5 and don't sell until it actually closes and breaks below the 10. If you want to be like really, that's even better. But if you want to be really, really tight, you ride the 5. But honestly, since it's peaked right here with this RSI right here, right there on that candle.
That's $174, right, Don?
On that candle, it has not broke the 5 SMA once right here. You could have got right back in, and you could have continued to ride this thing up. So what I would look for if you're looking to try to get into this stock, first of all, ask Donnie in the future, hey, what are you getting into today? So that way you don't have to try to get into it later on. But I would look for right in this zone right here. So this number is, it's right here, actually. Here's your numbers for your SMAs, right? So it's 170. The 10's over at 168. Wouldn't be surprised to see it come back and retest in that zone. Then I go to a higher, lower time frame chart, like a 15-minute, a 1 hour and a 15-minute, look for pivot points and moving averages there.
Yeah, we can make a case that as long as this thing consolidates above 170, the room could be there could be more room to the upside. And of course, as long as oil keeps going up, which is the case as we are recording the video.
Well, we also got
So
earnings coming up too, so let's not forget about that. That's the 23rd. So
that
that's
report
right
should
around
be
the
looking
corner.
pretty good. I would figure potentially. So that shouldn't be an issue. So these companies are killing it as of now. Most of the energy companies.
Well,
So
if
FANG shouldn't be the exception to the rule potentially.
if
Hey, let me
Occidental,
share a screen. Let me share a
yeah,
chart with you guys that I want to show you. Take a look at this. So let me share my screen here. Hold on. Take a look at this because I was talking about Occidental Petroleum. Take a look at this.
OXY.
So this is a 4-hour chart, guys, and we can make a case taking a look at this 4-hour chart that this push to the upside is a bit extended. So Occidental Petroleum is trading as of now 14% above its 20-day moving average. So yes, taking
short
into
that.
account that we're talking about Occidental Petroleum, about Oxy, yeah, this push to the upside is extended. Now, however, take a look at what happens if I pull up a weekly chart. The potential to the upside here, if oil keeps rising and if Oxy keeps rising as well, is massive, guys. Massive. This stock is trading at $52, and all-time highs comes in at $70.
That one came in on one of my alerts, actually.
Yeah, take a look at the
didn't
price
bother
action.
looking at that chart. I could see I got it.
And in the Discord today, we posted an unusual call option alert. Let me tell you guys about this alert, by the way. So yesterday, someone invested, probably an institution, $520,000 on call options of Occidental Petroleum, OXY, expiring on May 15th with, guess what strike price, guys? $70. So they are taking a gamble on the fact that Oxy might be headed back to all-time highs. And why not?
Oxy, you're right. Oxy. Yeah, not my favorite in business there. I think Berkshire still has a pretty sizable position, unless they liquidated that a long time ago. I remember years ago, many people were wondering when Buffett was just going to buy that thing outright. Obviously, never came to fruition. It's an interesting name. I just don't know how well it's actually run. But I mean, listen, you're clearly oil today. We're trading it. We're not buying it. So I would just defer to the technicals. Yeah,
I would say that among retail investors, this is a darling. They
really?
love Oxy because Warren Buffett loves Occidental Petroleum. So if you had 10 retail investors picking one single stock inside XLE, and you give them, I don't know, 3 potential picks, Exxon, Chevron, I guess, and Oxy, the vast majority of them are going to be picking Oxy because
I don't know.
I mean,
a lot of people like Chevron and Exxon.
The stock has a story behind it because the greatest investor of all times loves the company. So I don't know. So I wouldn't dismiss Oxy inside the energy cohort.
Well, you've been able to do it for a long time and get away with it.
I mean, yeah.
I'm just saying.
I mean, it's a retail darling. So we'll see what happens. Yeah. Don, your thoughts on Occidental Petroleum, please.
Yeah, well, I'm trying to figure out the chart. Sometimes I use a regression channel that's in Thinkorswim, kind of helps me out. So you could see that it actually had this upside, kind of move there, and then it had kind of a ranging kind of a move where it was, taking into consideration the move that went to the upside. So
that's a weekly, right? So that you're talking about like 6 months. That's a weekly chart.
This is a weekly chart. That's
so that's like
4 years ago.
Yeah,
4 years ago, then 2 years ago, and then now we've just coming out of it. Looks like
8 months,
about 2
10
years
months.
of this down channel right here. This is the channel I think that we're coming out of, and that's an impulsive breakout. I love those. So I'd love to see it kind of flag out, like right over here. Flag out on top of that, and then look for upside potential. You're going to get a little bit of dynamic resistance. You should start to see like a little bit of this kind of stuff around there. But if it can kind of, it's gonna stall. When you got overhead technical damage that's
What
happened
moving
over the
average is
course.
that one done? That's
What
the moving average that is above the candlestick on top.
It's labeled
that's the
56,
200. It's the
56.
200 period moving average for the weekly chart.
So it's a 200 week moving average. Okay, that's a big level, man. It's a big deal.
It's a very long moving average.
Correct. Yeah.
So
And
I
that
put the
moving average
weekly-
comes in at what price? Is that's $56, right?
56.18 or
56.16 is what it's
56.16.
saying.
So it's almost there. I
Yeah.
mean, it would be impressive if the bulls can burst through it like right away. If we happen to see a test of $56, so that's a potential target to the upside, and a potential tough level of overhead resistance for the bulls up there.
Look, here's how you do something like that. If you have a very strong impulsive move, say tomorrow, like that doesn't usually happen. Like usually the next day it's kind of it has to actually rest for a little while. But let's say tomorrow you get another candle that goes straight into that thing. If I got another candle like that, I would actually definitely look for a day trade that it's going to actually come back. Because when you're trying to knock down the door, you need to knock on the door quite a few times before you knock it down. So what would be better for this is if it actually begins, say it kind of just consolidates a little bit right here and then comes up there, does a little consolidation, then breaks out. That's what I would like to see if I'm going to try to get over top of the 200 period moving average. I mean, you got things, right? You got overhead resistance everywhere. There's people, Alvaro, you know this from trading from years. There's people that are still holding these, waiting to get out, break even.
For sure.
There's overhead supply everywhere, right? In fact, we're right at overheads. We're right at a resistance zone right now. So even as we speak, so it's got its work to do to get on top of that stuff and pick up the momentum. But it's got a great start to begin with. It had a very nice impulsive break out of this line right here. That's a beautiful looking candle.
So potential consolidation. We can make a case that potential consolidation above 48, right? Done could be attracting more buyers into this technical short potentially, depending on whatever happens with oil and with the situation, with the ongoing situation with Iran and of course and all that stuff.
It would be nice to see it come down in between these pivot points right here, and then maybe look for it to go long. Right?
Yeah, 47. Okay.
47
I
to 49.
I got the 100 week at 49.65.
Okay.
So it's holding
descending.
now as support, correct?
Yeah, it's a descending moving. I mean, it's at what, 52 almost. So I mean, it's moving. I've seen breakouts like this happen, and when you burst above a moving average like that, you often revisit it. So I don't get wrong. We wake up and oil's at 70, then forget what I said. It doesn't matter. But if oil's where it is today, then I would fully expect this to revisit that $50 level and probably go below it at least a little bit.
Hey, let's talk about the disaster stock of the day, Carvana. Good, annihilated, big time. Once the earnings report came out, I mean, we can make a case, guys, and I mean, this everybody knows this. Like the average reaction to any earnings report since mid-January has been to the downside. It doesn't matter what you report, you're going down the vast majority of the time. So we don't even need to take a look at the report. It came out above estimates. EPS, there was a big bit on EPS. Revenue came out also above estimates. The stock got annihilated, and this is a result earnings. So, how of the highs is this thing? This thing was cut in half, I think. No, maybe not in half, but how much is it? How much of the high?
It's $150 off the all-time high. So
what is it? 20%, something like that. So it's been going down a lot. So
yeah, it's like
is there
30,
any buy the deep
30%.
opportunity here?
I mean, I think it probably revisits 300 again, and then maybe. That's where I would look if you wanted to take a stab at it. 300, pretty fat number. It's touched there a handful of times, including in actually that's November. Did it go there in April? Let me see.
Yeah, I read a report from an analyst on I think it was Morgan Stanley last week, guys, and he was saying that Carvana was a no-brainer because the prices of new vehicles have been going up consistently because of tariffs, and that people are more likely buying used vehicles rather than new vehicles. So I don't know about that. I mean, I don't know if there's like a bullish case based on that assumption. But this is a retail darling, so you might have people buying the dip here. Thoughts on that, Dan? Yeah. Oh, Danny, go ahead. Sorry.
I'm just saying the people at Morgan Stanley aren't wrong about that, but that's not a new thing. People have been buying used cars for a while. It's since the pandemic, since we couldn't get cars shipped. Like this is, I don't know. It makes sense, I guess, but it's not new. It's not 2026. It's been going on for the past 6 years.
But so, Danny, I mean, the company reported better than expected, right? But how many competitors out there does Carvana have? Like,
not many, but it's also like this is one of those things. I like the stock, and I understand why people like the stock, but it's not a very good business to be in. So I like for me, this doesn't interest me. I don't follow it for that reason. But I know a lot of people that do and have made a lot of money doing it. So it's not hate. It's just it's not my kind of company.
Darling, yeah, 100%. Hey, levels done for the Carvana guys.
Yeah, Could I put you down to pick some up at $285, Don? You want to go bottom fishing with me?
Well, what I really wanted to point out to you is this. Look, the regression channel here clearly says buy. Okay, look, we're going up, right? That's when you want to buy. This regression channel says what? It says down.
Okay? But you would be a buyer, Donnie, down there, right?
I am not a buyer. I'm not a buyer.
No, Donnie, he said it.
No, I asked if I could. I asked if I could make some commission on selling in some shares at 285. I'm not interested.
Man, look at the slope on that 5-period moving average and the 10-period. I mean, that's a serious
it's ugly,
slope,
dude.
Yeah, when you got a slope like that, you got to come up into it. It's almost like fighting somebody who's bigger than you. You got to keep hitting them. They're not going down right away. This sucker.
Okay, but as of
has
now,
momentum.
Say that
it's
you want
going
it
down. I wouldn't be surprised to see it swipe under that 285. I could look for something like that. Maybe it does. I love when they do a swipe under, right?
See if it comes back. Yeah.
Comes back and then gets back into the channel, then maybe I might go ahead and try to do something on that, buy the dip opportunity. But I do also prefer for it to be not continuing to be in a regression channel like this. This is a daily chart, so it's been in this regression channel now since this huge candle right here. That candle was sold on huge volume, by the way. That's a 3 sigma volume candle right there. It's 3 times the average volume right there. So there was a big seller coming in, getting the heck out of it, and they probably put a shelf right here, then a shelf right here. We got millions and millions of shares. You're constantly looking. So every opportunity it gets to go higher, there's somebody who's unloading those positions, and until they're done unloading the positions.
A no touch below what level then?
I'm not touching it right now.
Okay. Below any level, that's okay.
But I got out of selling usually on swings for shorts. I would sell this on a day trade.
Hey guys, Oracle.
Sorry, hold on, Alvaro. Let me just show this for
I just wanted to ask you
that's in it, because that was a pretty vicious.
Do you have a shirt that you can share with us?
Yeah, that was a pretty vicious look at Carvana, and not that this is going to help anybody, but that line in blue is the 50-week simple moving average. It's below it now for the first time since October of last year. We'll see if it can reclaim this moving average in the next couple of weeks. Maybe that's an indication.
What level do you have the moving average at, Danny?
Let's see.
The 50-week.
$35.80.
That's a level that I'm keeping an eye on.
Keep an eye on it, sure, but again, like that's just so if you're in the stock and you're holding on to hope, if you don't get that back in a week, you should probably jump ship.
All right. Hey guys, Oracle,
yes. What about it? Has it changed? I stopped looking. No. It's painful.
I mean, we have been talking about this company during months. So what are the markets waiting for, Danny?
Dude, this
the IPO of OpenAI, definitely.
yeah, I
In the
mean, you have
meantime,
to
it's gonna be
assume
dead
that.
money.
I was talking with a friend of mine who I won't name, who does some work in the debt world, and I just asked him if he thought that this was a crazy overreaction from like the swaps, and he agreed that it was, but we both kind of ended in the same place. If you can find a way to buy Oracle's debt, that's far more attractive than trying to pick this stock right now.
Stock. Yeah.
It's interesting. However,
It's
to me
paying
that is a bit
it's
of a
paying
signal.
5%, I think. Something like that. I mean,
Probably
the
more than
last,
that based on what the
yeah,
swaps are doing. But I guess I'll put it this way. When you get to the point to where the credit or the bond is more appetizing than the stock, you might finally be making a bottom. That I remember when that happened in the software world during the 2022 valuation compression or 2021 2022 valuation compression era, where like the bonds on some of these, even Carvana, the bonds were like, you could buy them at like crazy, like $60 to par. And that was the bottom. I'm not saying that's where we are right now. I'm just saying that when you get to the point to where like even the layperson, like myself included, understands that buying the bonds might be a better opportunity than the stock, you're probably getting close to a short. Like you're probably getting close to a durable bottom. Like that shouldn't be the case. The bond shouldn't be more attractive than the equity from a risk return perspective. And when you get to the point like this where you have to, basically what I'm trying to say is the bonds and the stocks don't agree with each other. One of
yeah.
them's wrong.
I want to
So
show you guys something, right? Aside from the, from the argument that the Bears are making about, that OpenAI will not be able to pay Oracle for the commitments that have been announced so far. So, what you guys can see here are the revenue growth expectations. This is the average opinion of the average analyst that is covering Oracle as of now. So these guys know this company a lot. So revenue growth is expected for 2027 at 29%, for 2028 49%, for 2029 42%. If these guys are right, and at the end of the day, I don't know how, and I am not saying that this is going to be the case, but if these guys are right, and Oracle is going to be able to show the markets a revenue growth on a year-over-year basis on 2027 at 29%, 2028 49%, and 2029 42%, this would be, and I am not saying that that is the case, I'm just explaining what you guys are seeing on your screens. This would be like one of the largest buy the dip opportunities ever. This could be mistaken. Of course, this could be mistaken. But if the analysts are right, and this implies that OpenAI will be able to deliver what they are promising in regards to Oracle, this stock would be like the probably most undervalued stock out there, like by a mile. So this is just food for thought. I'm not saying that this will be the case, but take a look at what the analysts are expecting. So we have like a bifurcation, right, between the markets being extremely worried about OpenAI, rightfully so, maybe, and the analysts saying like, okay, this company is going to be growing exponentially in the upcoming years. So we'll see at the end of the day what ends up happening. Thoughts on that? Dan or Danny? Who wants
go ahead,
to?
Don. Go ahead, dude.
Well, I was looking at the chart, and actually, I'm glad you brought this up because it looks interesting to me, actually. So I drew my little blue line in, which for me, that means that it's a downward trend line for the daily move, for the daily chart. And yeah, we're on the weekly chart. Sorry, I should have made that yellow. Well, I'm going to leave it that way. Anyhow, it's real. You could see every time it hit that upper part right there, it's got a nice clean trend line right there, and it's coming right up from the high, right up from close by the highs. So I'd like to see it actually. And you have this 200 period moving average right here, which is also, a lot of people pay attention. A lot of the institutions and stuff, they pay attention to those 200-day moving averages. You got close to the 200-day here, and it ended up getting bought up. It went under for a couple days, and then it recaptured. And you can see from here, it never looked back for basically 2 years. It went up. It's now right back down there again. Now, it was coming in, look at this now, it's coming in at a lower slope, right? And then here it had a higher slope, but it wasn't coming from so far. This is a very long stretch it's coming from, and it's coming in from a high slope. But it also means that maybe your sellers are becoming exhausted. Once again, I like to see swipe throughs. It looks like it's almost trying to recapture over top right now. Wouldn't be surprised to see if it do something like this. And then meanwhile, this moving average starts to move up, swipes through, comes up over top of that, and then it's off to the races. I think you should keep this one on your watch list.
Say you're done. Say you're done.
I think
you're interested.
You should keep this one on your watch list. Watch him.
Come on, say it. Say it. You're interested. Come on, bro.
I'm interested. It's going on my watch list.
He said it, Danny. He said it. He said it
here. Okay, I want to be clear about that. Execution is everything when it comes to stocks. Price is truth. Okay, we can all suppose
100%. Only price action pays.
We dance
100%.
around a ring, I suppose, but the truth, price, sits in the middle and knows. Okay. But I am very interested because look at that. It touched the 200-day and it moved up, right?
That's $136. All right.
200-week moving average. I'm sorry. That's even more
That's a
impressive.
big deal. Yeah, that's a 200. That is a 200-week moving average.
So let's take a look at this on the daily chart too. Yeah. And look, it's captured the 10-period moving SMA. It's just under the 5, and the 5 and the 10 are become neutral. And so your 20 sloping down and your 50 sloping down. So it's going to put downward pressure on that, which kind of fits my scenario that if it breaks out, it's probably going to get pushed back down, retest that trend line. And then from there, you can make an evaluation. Does it have legs to go higher?
Awesome. Danny, is Oracle delivering an OpenAI or not?
Is Oracle whatting?
Delivering that revenue growth? Is OpenAI delivering?
It's not up to them. It's up to OpenAI. That's been the whole issue.
Go.
That said, though, I don't know if you saw. It looks like they're actually close to that $100 billion. Or excuse me, they're going to get $100 billion in funding that would put their valuation $850 billion. So I think that, if anything, should help stem the bleeding. But I mean, just a general point on this Oracle chart. It's been going literally down for 9 months, like since September of last year. Is that right? Since September of last year?
Yeah. Started to pull back.
Yeah. So maybe 5-6 months. How are there really more sellers? I mean, it's hard for me to believe that, because I feel like if you were a trader and you like wanted to try to stick with it, or you just, I feel like all those people that got in that were underwater are gone. Like you can go back a couple of years now, and these are the prices you could get at in 2024. So I think like long-term investors might be stepping in right now, padding their positions because they think the sell-off is ridiculous.
I think that if we didn't have any unexpected issue with artificial intelligence as a whole, quote unquote, the bubble pops, if that doesn't happen, I think that this stock might be potentially coming close to, putting out some sort of bottom. So yeah, for the most part, all of us are on the same page.
It should be on the board. This thing topped at 350. It looks like the bottom is at 133 and change. It got more than cut in half in a pretty short amount of time. Like, it needs to be on the board that the stock bottomed last week, or February 5th rather.
Hey guys, before we wrap it up, so
let me say one thing, Alvaro.
Yeah.
This is actually one of the type of stocks that I like selling puts on, because
the implied volatility is super high.
IV. That was what I just got done checking. It's been pushed down for so long that you got that huge cushion on that. You could go out a couple of months. So puts. It's also been it's been basically basing out here since February. If you see this, it's really been sideways since February. So the sellers are no longer taking action. And then if you're wrong, even selling puts, if you're wrong, you can just go ahead and get out. This doesn't move in the aftermarkets a lot, so you're not going to get like stung on it. You can see here it was basing out here, and then it went down a leg. It was basing out here, so you can't say that it's necessarily done, but it's definitely had a pretty extended move. So it is one that I would consider doing something like that with. Okay.
Yeah. Hey guys, before we wrap it up, we wrap it up. So tomorrow we have the core PCE. I mean, could be a nothing burger. I think that it could be a nothing, potentially a nothing burger. I think that the markets are very concerned about other stuff, and gold and silver still going up. What do you guys think about precious metals here? Before we wrap it up.
I'm not sure there's anything to worry about with PC. We had the CPI for the same period not too long ago. Uh,
Correct. Yeah.
Generally speaking, the
And
market should be prepared. Um,
they the rig got sold, so it could be the case tomorrow. We'll see. So
well, we'll see. I think I heard someone. I'll have to run the number myself. I didn't recreate this guy's work, but he mentioned that after the recent action in silver and gold, that the gold to silver ratio is now back within the historical band, which implies that they both can move up together. There's no real edge to having one over the other, so to speak. Or at least not to the same extent there was a couple of weeks ago. I still think that gold and silver are primarily part of this debasement trade, trying to get a little bit less exposure to the U.S. dollar. That shouldn't go away. No reason to think that that stops here.
there you go.
I don't think PC is
There
gonna
comes the
be much of
wave.
anything.
Take a look.
There
Good.
you go.
Go ahead, Dan. Thanks, Annie.
Yeah, no problem.
Well, silver supposedly is finishing out the wave 4 of a 5-wave move, and it's projected to be 125 by April of next year. So that's a very long time frame in regards to going up. But and then I think gold has actually completed the 5-wave move, which they move in pretty much tandem with each other. So that may end up relabeling. Yeah, see, it says gold's already completed it. So I'm a little suspicious that maybe that wave 3 on silver is actually a wave 5. These things don't all, once again, these are indicators. They're not 100% all the time. They give you an idea of things. It looks like gold is right, at least at this stage, it's actually reached its full potential of the wave 5 move, which means then you see either a sideways move or a pullback move, and then you could get into another wave 5. You see right here? It did the wave 5 move. Then you had an ABC pullback, and then it went right back into another 5 wave. I do think the macro environment, and we're in a generational time when the metals are actually going to go up. And especially, I'm especially more interested in silver because I'm interested in it from the idea that AI infrastructure spend is going to continue to go, and then silver is one of those things as well. It had a terrible pullback.
Where would you be?
35%.
What levels are you looking at here? The start of the position now, then.
It had a one-day pullback that set a record for silver, 35% from the close one day to the low of the next day. That was a one-day move. And so I pulled a fib from when this began, and it looks like we almost made it down to 50%, which is $63. You could easily see this thing come back to it even around in the 50 range. And if it does that, then you probably should be a buyer of silver. It's not necessarily shaken everything out yet. It still has downward slopes on the 10 and the 20-day moving average. The 50 is offering some positive support coming up, so that's why you're starting to see this chop right here. Is also
that's
at the 50%
right?
mark, huh?
So above $71. $71 done.
$71 as we speak. So it just recaptured the 5 and the 10-day moving averages. The 20 is up there around 80. And it had 2 days where it was actually up, which was kind of nice to see because you could see it was really struggling over the last 4 days prior to that. And it looked like it was going to break this low right here, which it went right down to the previous low. And actually, I think it did a slight swipe under at $65. Wouldn't be surprised to see this get down into the 50s and 60s, though, honestly.
So long above 71 and a bit skeptical below 71.
Yeah. But once again, I also believe in the long-term aspect of this product, this metal, in all the metals. In fact, I think we're in a mega trend with that.
Okay, guys. So that's it. It was a long podcast, but we covered a lot of stocks and we talked about a lot of issues. About a lot of interesting matters in regards to the market. So thank you very much for coming on today, Don. Thanks.
Thanks for having me,
Yes, it's
guys.
nice to have you guys. Everyone,
Yeah.
thank you for stopping in for episode 32. If you'd like to find Don or Donna, you can check the description box below. And me and Alvaro will see you next week. Thank you guys.
100%.
Take it
Thank
easy.
you. Bye bye, guys. Thanks.